On stage, none other than Cathie Wood, the CEO of ARK Invest, a very early and big-time Bitcoin investor. Welcome to the stage, Peter and Cathie.
Hello, everybody. Hi, Cathie.
Hey, Peter.
We're only going to talk about Bitcoin now.
Really?
Yes.
Yeah.
How have you been?
Great. How have you been, Peter?
Been very good. We are only at the end of May, and it's been a crazy year already in the world of Bitcoin and crypto. It's been a crazy year already. How have you taken it all in?
Have I taken it all in? It's in terms of what's happened to us. It's been heaven sent. It's been we've earned it though. We've been doing research on Bitcoin since I founded ARK in 2014, which is a lot longer than any of the other competitors have. So we've been very gratified.
And back then, people thought you might have been a bit crazy. What are you doing with this crazy digital Bitcoin thing?
Yes. So in 2014, we wrote our first blog on Bitcoin. Which didn't get any attention. And then in 2015, we wrote our first white paper on Bitcoin with Art Laffer. So Art Laffer is a monetary scholar, and Art read the paper, got through it, and said, whoa, this is what I have been waiting for since the US closed the gold window in 1971. This is private money. This is going to be big. And I said, okay, how big? Yes, the big idea. How big, Art? He said, how big is the US monetary base? Back then it was 4.5 trillion, now it's 7.5 trillion. So it's a big idea.
Right, so I think the big topic of the year so far has been ETFs.
Yes.
We should start with that.
Yes.
Finally, the SEC allowed for a Bitcoin ETF after pressure from the lawsuit brought.
Yeah, they were dragged kicking and screaming into it. Yes.
Gensler was reluctant.
Absolutely.
Why do you think that was?
Well, we've been trying to figure out, was this because Gensler had aspirations to be Treasury Secretary, and the Treasury Secretary really is, guards the dollar? That was the only explanation after he had been at MIT teaching about Bitcoin, seemingly with enthusiasm. So I thought it was that. It could be, I'm sure it was politics. There was a contingent of the Democrat Party that was anti-crypto, no question about it. But what's very gratifying about FIT 21, the act that the House passed last week, is that was bipartisan, 76 Democrats. So this is an election year issue. And I think Coinbase and all of the others and we've participated as well in pooling together funds to help Washington understand, how important a movement this is. I think that's working.
Yeah, we'll come back to the regulatory side because
Yes.
there's a lot to cover there as well.
Yes.
So now we have the ETFs. How has that changed the game in terms of the people you talk to, the people you advise, the people who come to you for investment?
Well, a lot of people found ARK because of Bitcoin in our early days. And so they were in the retail space, individuals who were just buying for their own accounts. What has changed is we are now talking to the major platforms. So we call them wirehouses, so Morgan Stanley, UBS, Merrill Lynch, Wells Fargo. And they are in deep due diligence, like, okay, what is this? We have to have a point of view now. They actually have an index against which they're going to be judged, and that's an ETF, right? Now Bitcoin is part of how they're going to be graded. And while no major platform has yet put any of the spot Bitcoin ETFs on its platform yet, we think that's coming. We can tell from the kinds of questions they're asking. They're asking deep questions, not only about Bitcoin itself, but about infrastructure, ops, risks, and so the heat is on because this is a new asset class. Bitcoin is a new asset class. It's a monetary system to be sure, but it also represents a new asset class. And what that means in our world is that as a fiduciary, someone looking after portfolios for people, a fiduciary has to consider a new asset class because of the low correlation with other assets in terms of returns and risk. And so if you add Bitcoin to an existing portfolio, if that is right, and this is low correlation asset, what that means is over time, returns per unit of risk will go up. So if one platform has Bitcoin and offers that opportunity of diversification and higher risk-adjusted returns, and another doesn't, then they're going to have a problem if this one's right.
So how much bigger would it make the inflows with these platforms? Because we've had some considerable inflows already to the likes of yourself, BlackRock, everybody else who's launched their ETFs. How much bigger does these platforms, how much of a difference would these make?
Well, the ETFs are a wonderful structure. They can scale. You've got an ecosystem. This is not just the 10 companies or how many are still in operation. I don't know if any, I don't think any has outright failed yet, but the ecosystem, the structure is extremely flexible because the authorized participants, the market makers, are not inside one firm. We have dozens of authorized participants, and those are the big brokerage houses. So this is another reason they're being not forced into this, they're being lured into this because the ecosystem, authorized participants, market makers is a very lucrative ecosystem. And these wirehouses host many of them. So I think we could scale to hundreds of billions of dollars.
Wow. And so we now have Ethereum ETFs arrive. And
shocking.
Shocking. Disgrace. And it, but there didn't seem to be such friction in the Ethereum ETF being approved as there was with the Bitcoin ETF. What is your read on that?
Oh, the read was it was not going to be approved. It was absolutely not going to be approved. So what happened? If it were to have been approved the regular way, we would have been getting questions, meaning from the SEC. And no one was getting questions from the SEC beforehand. So that was an indication, no go, just, we'll have to try it again. What happened in 1 week's time, and I truly believe this was one of the things that happened, is there was sentiment evolving around this Fit 21 Act in the House that, wait a minute, this thing is gaining momentum on both sides of the aisle. And wow, this could be an election year issue. This is an election year. So the administration, I think, basically said, oh, and the other thing that happened was former President Trump has become much more cozy with Bitcoin, crypto generally, and that week said he would accept campaign donations in crypto. So again, this idea, this is an election year issue. And then I cannot tell you, I was on the phone with our COO, and he was like, he screamed when he saw this come across, like, what? It was within 3 days of being denied. We were sure. We were sure it was going to be denied. And I think it was this campaign election year. You've got the legislative branch. You've got former President Trump. You had, rapid fire, and boom, here we are.
Do you think we're at risk now of getting a number, maybe hundreds of shitcoin ETFs, which will confuse the market for investors? Because selling the concept of Bitcoin is difficult in its own when you have to then explain all these other meaningless cryptocurrencies. Will that make your job a lot harder?
I don't think so. I don't think the wirehouses will accept. There could be two, or these two, maybe Solana, maybe. But I don't think that the wirehouse platforms will want to do more than the majors, right? Just to give their clients exposure to this new asset class. What I do think is, and we have some of these, that private funds are going to sift through the thousands out there and probably find, 20 or 30. But you're going to have to do a tremendous amount of due diligence because, as you say, there's a lot of nonsense going on out there.
Yeah, okay. Let's talk about the regulatory environment because you've touched on that a little bit. So there's an election coming. Mm-hmm. We're all sat in the UK with our popcorn,
yes,
waiting to watch this. And we had President Trump come out and say some very interesting, important things. Firstly, he said if he was voted in, he said he'd free Ross, which is obviously a great and important thing for people in Bitcoin. But he also said a couple of other interesting things. He did say, yes, he would support Bitcoin and crypto, but actually he went a step further and said he would support the right to self-custody, which is an important principle of Bitcoin. What's your read on this? I mean, politicians can let us down. What's your read on this?
Well, my read, but consider the source, is that Art Laffer is one of his advisors. And Art Laffer and I were just in El Salvador together. So, and I've watched Art's evolution. He's 83 years old. He has served, I think, almost every president, but after his experience with President Nixon, he has never been paid by any of these presidents, and I'm saying on both sides of the aisle. And he is more excited about Bitcoin, and I've known him since 1976. He was my professor at University of Southern California, USC. I have not seen him more excited about anything. He's 83 years old right now, more excited about anything since Proposition 13 in California, which was property tax reform. But he's more excited about this because it has ramifications for the world, not just at that time, California.
Those ramifications, what are the main things he thinks? What are the biggest changes he thinks this will bring?
Well, and I can speak to this as a portfolio manager in the equity space as well. I think he thinks, and I could not agree more, that the fact that the Fed, the various Fed members can get up every day and whip around all financial markets with a few words, or the nuances around a few words, is ridiculous, ridiculous. And he, right, it's just ridiculous. And the volatility that this is creating in the markets, that they are creating, and the boom busts that the Fed is creating, they blame everyone else, but it stems from errant monetary policy. So this idea of getting back to private money is very exciting. Now, I needed to be educated on this a bit because I've studied economic history, and if you look at pre-1913, when the Fed was first came into existence, prior to that, what you see are booms and busts, regular booms and busts. You see on average price stability, but booms and busts in the economy. And so in speaking with Art about that, he said, well, that's right, but the adjustments that happened to various changes in the economy or in technologies or whatever, they were almost immediate. What we have seen with the Fed is it has enabled bad behavior. Think 0% interest rates for as long as we have. You know, think about all of the real estate speculation that took place. So now we have a mess in office space, and I think the mess is brewing even more importantly in the multifamily space. And we don't know what other accidents are going to happen out there because of so many years at 0%, and then the leverage taking and the reach for yield. So I think, honestly, the Fed's time has come to go.
I was just about to say, do you think it's time to end the Fed? But it sounds like you think yes.
Well, at least dial it down dramatically, and let market forces and let the quantity rule of money. I know that's what we're dealing with Bitcoin, but eventually that will evolve into a price rule as Bitcoin becomes prolific and goes global, and becomes the global monetary system.
You briefly touched on SAB 121 and FIT 21. Just what is the signal that's giving you? Because this is now bipartisan support. What does that signal to you? Because some people have always worried that the Bitcoin is a threat to the dollar. They're not going to let it exist. They're not going to let that threat exist. But yet in Congress, they're actively working against the parts of the Biden administration and Elizabeth Warren and their attempts to destroy it.
See, what I think is going to happen is the currencies at risk right now do not include the dollar.
More global.
It is the emerging market currencies, which I don't know if you've been watching, but the devaluations taking place around the world. Again, our monetary policy, I believe, is causing that. The dollar going up. The Nigerian naira is down 50 to 60% since last June. The Egyptian pound devalued by 40% in March. Think about this. In Latin America, you're seeing any currency not tied to the dollar, and
I mean, I was in Malawi a few months ago, and they devalued the currency just before I got there.
Yes. And what's interesting about this is you're not hearing about it. Maybe this part of the world is hearing about it because you're sensitized to it, but in the equity market, nobody's paying any attention to this. None. They don't talk about it, they don't care about it. So those are the currencies, we do believe in our price target for Bitcoin. In our base case, we believe that if you were to look at global money supply and take out the big four, so that's US, UK, Japan, and Europe, take those four out. The rest of the global monetary supply, we assume that 3% will effectively, that Bitcoin will take over 3% of it. I think that's a very conservative assumption, but that gives you a sense of, and I know when we get to price targets, we don't sound conservative, but 3% is conservative. I think it could be much higher. I think it could be 20%, because I think President Bukele is showing the way. You want to increase purchasing power. You want to increase wealth. And this is, for countries and individuals whose purchasing power and wealth are being destroyed, they need an insurance policy.
I mean, you touched on earlier, back in 2015, you wrote your original paper, or was it 14?
Yeah, I just wanted to say one other thing. One of the other things that has disappeared in conversation is CBDCs, right, where the central bank digital currencies. You're not hearing that. Why aren't you hearing it?
Well, I mean, I've got my own views on that. I think the idea that a government can launch a CBDC is not really palatable, but there are suspicions or questions about the stable coins themselves are acting as effective CBDCs themselves.
Yes, well, I think one of the reasons they're not happening in the US, the pure play, is it's a states' rights issue. Governor DeSantis in Florida said, no way, no way. Well, you can't have a currency that applies to everything but a few states. You know what I mean?
I mean, Trump said he won't allow it under his watch as well.
Right.
But yeah, so back in, was it 2014 or 15, the original paper?
The first blog was in 2014, the first white paper with Art Laffer, 2015, and then the second white paper, which was in collaboration with Coinbase when it was in, I think it was Series B funding, was Bitcoin, ringing the bell for a new asset class. So yes.
So back then, you know, Bitcoin was fairly new. Most Bitcoiners were seen as weirdos and crazy. We're now here in 2024. We have ETFs. We have banks considering it. You're mentioning 3% adoption rate across countries. It's legal tender in El Salvador. It's an issue on the ballot sheet in the upcoming election. President Trump talking very proactively about Bitcoin. Are you amazed at how far we've come in those 9 years?
No, I'm not. This is a big idea, and it's unstoppable. There's no throat to choke. I think our confidence went up when we saw what happened when Facebook, at the time it was Facebook, launched Diem, right? And you remember the ruckus that caused, especially in Europe? Well, there was a throat to choke. It was Facebook, and it never happened. There's no throat to choke here, so it's unstoppable.
I'm conscious of time. I never have enough time with you, and I've got pages of questions. But one thing we should talk about is as Bitcoin expands as something that politicians take seriously but want to regulate, as large pools of Bitcoin capital get hoovered up by the ETFs, how important is it, and how do we maintain these key principles of Bitcoin? Because without decentralization, without censorship resistance, without the right to self-custody, what made Bitcoin valuable could be lost. And adding to that, your thoughts on how we ensure that the developers are supported, defended against aggressive lawsuits and funded. A lot there.
Yeah, that's a lot. The second one canceled out the first. Shall I talk about it then?
Sure.
Yeah. There was a big ruckus around us and supporting Bitcoin developers. I had the honor of meeting a good number of the core Bitcoin developers in 2019 at a big confab in Uruguay. And what I found there, it increased our confidence just enormously. And I do have to give all kinds of credit to the 4 people at ARC who are working on crypto, led by Yassine El-Madra and David Puel. Many of you know him from his on-chain analytics is here as well. Now I've lost it. Oh yes, so we saw from the youngest developers to the most seasoned, the monetary scholars. And I said, okay, yes, this is all good. And back then we started thinking, how can we support these developers? So the spot Bitcoin ETF comes along, and we thought, well, our first filing was for 80 basis points, which we knew it wasn't going to happen. We thought 60 basis points. And of course, here we are at 21 basis points. Well, we're not going to make any money on this. And we reconciled ourselves to that fact by saying and believing that Bitcoin is a public good. And so we should not make any money on it. We should make it as accessible as possible to as many people as possible, so keep the fee very low. So our original idea was to take a percentage of the profits and give them to core developers. The problem is we're not making any money, so that would be disingenuous, wouldn't it be? Right?
I mean, it'd be your choice.
Whatever
I think
percent.
it'd be very generous.
What X percent of 0 is nothing.
You can make a loss.
No, the much better idea, and what we are doing, and we've agreed to do, and we've talked to many important people in the Bitcoin world, is to use a percentage of our revenues in our private funds.
Nice.
That's a much better idea, and no one is doing percent of revenues.
Is this the first time you've announced that?
Yes. You heard it here first.
Thank you.
You're
That's
welcome.
very cool. I mean, I think it's very important to do that. I also think it's important that we continue to educate people on the importance of decentralization.
Yes.
The importance of avoiding the risks of centralization. I think at the moment there's one risk, which is minus centralization. And so I think that's something important to do. How do we ensure that these standards are not lost? Because it's a very easy message to explain when the community is small. When it's billions of people worldwide, how do we ensure we maintain these principles?
Yes, I think half of the solution is understanding the problem. So we are going to be, we are in the process of, and David here is I think, leading this, of creating a decentralization index and a monitoring for centralization versus decentralization. So actually putting out there, look, self-custody is really important, critically important, but access is also important. So we're dealing with a balance here. And self-custody is hard, and some people don't want to deal with it, and so forth. So this centralization index, I think, is we're going to start, I think it's in the fourth quarter of this year, we're going to be putting it out there and measuring it. And, you know, we'll have red and green if there's anything, you know, moving toward, if centralization is moving toward the red zone, we're going to be all over it. And I know the Bitcoin community is going to be all over it. And, you know, again, half the solution is understanding the problem.
Love this. Very, very cool initiative. Right, we're running out of time. What particular headwinds do you think we should be keeping an eye on right now? You obviously, you've got a very good research department at ARC. What are the things that people here should be thinking about, concerned about, that's coming our way in the future?
Goodness, so much has happened. I mean, I used to, in 2022, FTX was the implosion, and then the political backlash was the biggest fear. I'm amazed that we got through that so quickly, and that's what gives me so much confidence. So, you know, I hate to say that it's not like there aren't any risks. Regulatory here is still a big risk. It just is. It is on Bitcoin, it is on AI, it is generally, we're going to, in this country, lose our edge. We're going to lose a lot of talent to the rest of the world. And so that's one of our biggest concerns, but that's for innovation broadly, because our economy has become much too regulated.
Okay, last question. It's a big one. Bitcoin or Ethereum?
In terms of what?
What would you invest in if you only invested in one?
Oh, Bitcoin, hands down. No question. No question about it. It is, because I don't have to tell you this, it is a global monetary system. It is a technology, and it is a new asset class. Those are three big ideas in one, and nothing else in the crypto world comes close.
Amazing. Cathie, that was brilliant. I wish we'd had another half an hour to an hour. We could have talked about loads more. We didn't even get into AI, really. But thank you, and thank you for all the initiatives you're doing with ARC.
Pleasure. Thank you. Thank you.